Hey, what's going on, investors? EBS Invest here, coming back with a brand new video for you guys. Today, we're checking out the company that has likely been flying underneath your radar, and you may not have even heard about this company before. You're thinking, EBS, what even is a Lamb Research Corporation? Like, do they research cows and like different agriculture products? You're wrong. Lamb Research Corporation is one of the leading fabrication equipment and related services in the semiconductor industry. This company is massive. You're looking at an overall revenue of 15 billion and a market cap of 63 billion. Now, we're going to talk about this company, why I think it should be in your portfolio, and why it should be on your radar as well. Plus, I think there are a lot of really bright and opportunity areas for this company to grow for the future. I would like to show you guys one thing because I think it's kind of funny. So let's compare this thing to the SPY, the S&P 500, and check this out. On the max chart, the lamb absolutely smokes this thing out of the water, including on the 5 year, but not on the 1 year. We don't really like to talk about that so much. Semiconductor is not doing very well this year, but in terms of the 5 year and max, it's doing pretty well. Anyways, let's jump into the video here. Now, a few things I would like to talk about before we even get started. This is what I'd like to talk to you guys about. So, Lam Research is a market leader in polysilicon etch market used to form transistors, and it's also part of the metal and aluminum interconnect etch market, lesser share in oxide, dielectric etch, and other forms of insulating layers. So you're probably thinking, what even is this? Speak English to me, basically. Well, so when you get a wafer, it's not going to be perfect because you're not able to actually put in the transistors. So they have to take off a level coating, and then they etch in the transistors with some really high-tech machines. So this company basically just takes the wafers, and then they can make their own wafers, or what they do is they make the machines for that, and then they sell it to companies like Intel. So the company's major semiconductor memory, foundry, and integrated device manufacturers that make non-volatile memory. So they make a lot of DRAM for a lot of companies like Micron, Samsung, SK, and Toshiba. So looking at financials, you can see that Lam, along with most of the semiconductor equipment peers, have been pretty cyclical if you look back in their graph, with periods of strong growth and high margins leading to over-investment and excess supply. But going forward, we think that Lam will experience less cyclicality due to increased size and maturity from the semiconductor industry. So this could be due because it's partnering with such big clients now that Samsung knows where they're going to be in a few years. So they're able to, project better, and they're able to put in orders better, if that makes any sense. They view Lam's balance sheet as a strong cash flow generation and gives it financial flexibility to aggressively repurchase shares and make an acquisition if it chooses to. The company has 3.5 billion in cash and a total debt of 5 billion. Now, don't get me wrong, debt is important, but this company can easily pay off its debt. In total, it has $6.4 billion in assets, so if it wanted to, it could pay down its debt tomorrow and have leftover cash. Last thing I want to talk about. So, semiconductor equipment sales are very concentrated among the same companies such as Intel, TSMC, and Samsung, expected to be 60% of total sales, especially in this field. But Lam is reaching out into the OLED and LED display area to merge new markets for the handsets and computer sections, and kind of a little bit more consumer based than corporation. Going back over here, I want to show you guys their revenue breakdown. So you can see that this is their memory section. So memory accounts for 54% of their revenue, and DRAM and NVM is expected to grow at really high margins, so that's why Lam is so focused on it. You can also see that their foundry and logic section account for a good chunk of their revenue too. Broken down by region, you can see that China, Korea, and Taiwan make up the majority of their revenue, and you can see that the US is 8%. They did say that with the CHIPS Act, they expect to grow their US market considerably, and they have plans on expanding in the US in terms of facilities there too. Now, I do want to show this out. So you can see that they have a gross profit margin of 45%, and you're looking at operating income of 31%. you can see that they have taken down their shares from 140 million to 138 million from the last quarter. So they have a $5 billion share repurchase plan where they plan to repurchase over $5 billion of their own shares over the next few quarters. So you can see they've already taken back 2 million shares, which is really strong. You can see on their capital return that they have, like I said, the share repurchases, but you can also see that they're increasing their dividend really handedly. Since 2018, it's gone from 80 cents to $1.45, and from 2014, from 18 cents to $1.45. I would like to point this out though. Yesterday, Lamb announced that they're increasing their dividend by 15%. So that's really strong. Even though the company may be fearing a recession, or maybe the industry is, this company is flushed with cash, able to pay down their debt and increasing their dividend. I think that says something about their leadership. Now, I want to go over to the track your dividends page. So, like I said when I was talking about the company just a little bit ago, I listened in on the earnings call and I was very happy to hear what the company had to say. They said that they expect to grow in the high single digit margin and potentially double digit teens, which is really cool. And an analyst asked them, well, if the chip market, falls apart or they're experiencing no growth, how are you guys going to handle that? And I think the CEO answered it really well. Lamb has a playbook for every type of scenario because they've been in the cyclical nature before. Going back to the 10-year mark, you can see a little bit, not so much anymore, but you can see that it was very cyclical, up and down, up and down. But they said that they were able to handle any economic headwinds that come their way and that they have a playbook for it. So I think that's just really good to see. Plus, they also said that they're able to increase their dividend because they're so optimistic about their future. I was listening in on Applied Materials investor call, and they said that they have a backlog of orders, they're slowing down hiring, and they're uncertain exactly as to how their future projects, especially with the inflationary pressures. Don't get me wrong, Lamb said that inflationary pressures, as well as other pressures along with the market, are really hurting their business. But they said that they plan to grow in the high single digit range and have a better quarter in September than they did in June. Whereas Applied Materials could not say that. So I think Lamb has a really good leadership team, and they're very optimistic about the future. They even said that they're going to have record-breaking revenue in September. Even considering the market, I think that's really solid. So let's go down. You can see we already talked about the dividends. $1.50 here, and you can see that's a very nice graph that is growing that way. You can see scrolling up here, we're looking at a 19% payout ratio. This increase is wrong. Must have something wrong here. And then an annual payment of $6 and a dividend yield of 1.25. So this payout ratio means that only 19% of their free cash flow is going to pay in a dividend. So they could increase this substantially and still be healthy. I think any payout ratio below 50% is really solid. Now, one thing, everyone likes to think that the semiconductor industry is really overvalued. And I would tend to agree. Looking at companies like Micron and NVIDIA and AMD are overpriced companies that I don't think anybody should be buying unless you think it fits your portfolio. Look at this company. It has a PE of 13.9. That is really solid to see, especially from a semiconductor company. Now, let's scroll back up and let's go over to the charts page. So, let me refresh the page here. Sorry about that, guys. Whoops. So, you can see that from 2013, they've been increasing their profit margin pretty handedly. Like I said, going back into their earnings, you can see that they have increased their gross profit margin by 1%. They said that in the next 5 years, they expect their gross profit margin to be sitting at the 48.5% to 49% margin. So I think that is really positive to see that the company is able to increase its revenue and increase its gross profit margin. Going over, you can see that the return on equity is also really solid. Like I said over here, you can see that they have a great return on equity, and so they have been doing very well at making sure that their equipment as well as their investments are paying off well. Scrolling down into their sales, you can see that they have been increasing their earnings really handedly, as well as their cash flow. So this company has been increasing revenue, increasing that dividend, and is optimistic about the future. It looks really solid so far. All right. So now let's check out the dividend page. So you can see they do have a danger on the consecutive dividend growth, but I don't agree with that. I'm not exactly sure why. Maybe it's because I see the increases as too much, but I'm not concerned about the dividend increases as at all. And you can see, like we said, that 15% increase yesterday. Going over to the competitor analysis, you can see that this is where LAM is. This is Applied Materials, and this is KLAC. KLAC only has 8% of their business actually overlaps with Applied Materials and LAM. So really the only two competitors are LAM and Applied Materials. But I was really disappointed to see Applied Materials earnings call and how that they're less optimistic about the future. So that is the reason why I'm showing you guys LAM today and why I think it should be in your portfolio also. Going over to the valuation page, you can see that they have a valuation of $830. Currently, the stock is trading at $453. If we go over into our software and put that in here, and then we apply an 8% growth rate. Now, I have a PE of no growth of 7.5, and I think I might up this to 8. Why? Because this company has a considerable moat. No company is able to come in and start a semiconductor industrial section. It's really expensive. So I think this company can't get touched even in an economic slowdown. So we get an intrinsic value of 687. And that means we get a blended average of 758 and a buy price of 607. So I think this company, considering it's trading at 453, is a really solid deal. And going back here, you can see that they're actually trading at a pretty considerable discount because the semiconductor industry, well, hasn't been doing too hot. Since it's high, you can see it's down over 38%. So, in conclusion, this company offers a strong balance sheet, really strong leadership, and high growth potential for the future. They're increasing their dividend in the double-digit margin and have been increasing their revenue by region overall. This business has also been buying back its shares and is really strong and optimistic for September. I think if you buy this company, and even if your dollar cost average down, if it continues to fall, I think you will see a nice return as well as you'll be able to reap that dividend. One thing I want to touch on is ASML. I'll look that ticker up. ASML is the leader in ultraviolet light chip making production. They have a monopoly on lithography, and Lam said that in their recent earnings that in 5 years they plan to match ASML in their ultraviolet light production of chips. That would make a duopoly, and that would be insane. You guys need to look into this, but the profitability of the lithography and ultraviolet light production is absolutely astronomical. So this is really good to see. This has been my analysis of Lam. Now I understand this video is longer. Thanks for watching all the way to the end. I really do think that this company should be in your portfolio. Like I said, high growth, high dividend growth, and a really strong leadership team. I think this company is a really good value and buy. This has been EBS Invest. Thanks for watching, guys. Peace.